Welcome to our final session, which is the Junior Mining Showdown. So this is a pitch battle, and we're going to have 4 companies pitching for a £1 million fictional investment. So each company will pitch for 5 minutes, followed by a Q&A from our investor judges, who will decide a winner at the end. At the end of the final pitch, we are going to put a QR code up on screen. So please feel free to scan it, and then our audience can choose their winner as well. So I'd like to welcome our judges, Erez, Ichilov, Ed Bonner, and Ellie Owens. And our first participating company is Kimberley Ann, founder, CEO, president, director of Lahontan Gold.
Hi, everyone. Okay, I don't even know what's in this deck right now because they told me I had to make it into 5 minutes, so I guess I'll talk really quick. For those of you that don't know me, I think I recognize everybody in this room. This company is a labor of love of fantastic assets in Nevada. We talk about this all the time when you're investing in mining. Why would I invest in your company? And I tell everybody the same thing. Well, check off your list what makes you comfortable, how risk averse are you. And when I look at companies, I want to make sure they have a good team, a good jurisdiction, the metals that I want. And it's just all about comfort level, sizability, infrastructure, etc. I think we can hit all those marks for everybody in this room. Santa Fe Mine is a past producer in the Walker Lane, Nevada, tied with the top jurisdiction in the world next to Utah. We're in an area where there's no people, there's no anything growing. It's the very driest place in Nevada. So very good place for infrastructure. And we're fast tracking this back into production early 2027. We have another asset called West Santa Fe. It's a satellite operation to be for the company. It's a lookalike to Santa Fe, all oxide. Starts at the surface. It's going to be open pit. What's exciting about this is we don't have to hit a home run of how much to find there because we'll be sharing operations next door. So we can share infrastructure, etc. And then Moho is a high-grade gold and silver vein system. We're not really focused on it currently because we were very busy getting this back into production. But back to that checklist, Nevada. Great place to be. The Walker Lane, as you guys probably know, is blowing up right now. The activity is fantastic. Different than the Carlin trend. We have gold and silver. So as we go through this process, it's getting to be even more important as the higher grades of silver keep pulling into this project. We have 2 million ounces right now on paper for all of you guys to see. We have lots more that we'll be talking about in early January as we're drilling right now, redoing our models, upgrading the resource as we speak. Infrastructure. So mine in production back from 88 to 94. About 400,000 ounces of gold, 700,000 ounces of silver. It closed down in 94 because gold was at $340. It got bought out. It's, the basics of our industry. But what they did leave behind was 3 wells with all the water rights, which today in Nevada is worth millions. We monitor those wells on a quarterly basis. We have been doing that for 35 years with a perfect record, no cyanide, etc. But what we do have is a lot of water, so that's fantastic. We also have a substation that was put in 1988 when this project was started. Nevada Energy takes care of it. It's right at our Anmid site. And it's going to create low-cost power for the company. So size and scale, we're going to be bringing up the resource. You'll see more ounces in the very near future. And we'll be permitting full permit in early 27. So the breakdown of the published document we have currently out to the public. It's a very nice quality document, 1.54 million ounces in indicated and 0.41 in inferred. Really good grade, 0.93 gold EQ on just a gold basis of 0.64. Second highest grade open pit mine in Nevada right now, next to Gold Bar. Although when you look at the breakdown of cash costs all in for our company versus others, It's lower than all of those. So this is what it looks like. This is our biggest pit on the project. There's 4 historic pits. This is 90 meters deep. You can see there's no water at the bottom, so we're well above the water table. We don't have to worry about dewatering, etc. 50-degree pit walls there. Been sitting there for 35 years, so when you think about competent rock, here you go. I don't need to ask an engineer to drill holes and go through the data. It's right there in front of us. And all that beautiful oxide material. So the goal over here is just to lay back that pit. Infrastructure galore here. Road access. You see how dry it is. Nothing grows. We've been going through the permitting process for 3 years. And we can't find anything out there. They make us look for pygmy rats and raptors and everything else, but the good news is nothing grows out here. There's no First Nations. They didn't live nearby here because they never had water. Santa Fe pits in the background there. The forefront of this picture, the slab Calvada complex. This is the beautiful low-hanging fruit on the project. There's virtually no strip in this area, 0.6 strip here, so every shovel is full of gold and silver, and we're just continuing to focus on drilling this part of the project out. So we put out a PEA in December last year. This document's, I want you to think about it more like a PFS because although we can't say that in a published document, it really is like a PFS. It's very highly engineered, back-end loaded because we are focused on building this darn mine soon, and we need all that data to submit with our application for the mine permit. So it's a highly detailed document. Life of mine strip right now is 1.6. Most of that's over at Santa Fe, as I said. The CapEx we have in there today is $135 million with a 20% contingency. We are looking at this project as a contract mining right now, and even with that put into this thinking, we are still very low cash costs of $12.33 all in. Payback period is 2.9 years. 9 months of that is construction, so a reasonable payback time when we go to fund this. Right now, it's an 8-year project life. This model, by the way, was done at 1950 gold with 1950 pit shells, so it's not really reality of where we're going to be in early 2027. But again, in early next year, we'll have a new one out, and you'll see new numbers with more drilling and everything else in between. Right now, it's a 50,000 plus ounce producer, 200 million NPV5, IRR is 34%, and almost $1 billion life of mine in this picture. We're drilling right now. I was just out there last Monday playing in the dirt on that drill site right there. The mineralization looks fantastic. The team's out there right now. This program is just designed to bring the pit shell down, add more ounces, and just do some met work so that we can actually talk about what the recoveries are here. You see that red line? That's the 1950 pit shells we're working off of. Just dropping it down to 2,200, the dotted line down there shows us adding much more ounces that we did not report in this document, but for us, again, it's very crucial for our drill program going forward and our new resource report. Permitting, we're doing a plan of operation, which is drilling out, allows us to drill out the whole project for the rest of the time of this company, and the mine plan at the same time. The mine plan is in the exact same footprint. And the reason why we did this is because all the studies we have to do, it's crucial that all the bugs and mice studies are in the same footprint so we don't have to do them separately. So it saves us 2 years of time and money. But importantly, this is under 640 acres, which means it's an EA versus EIS. It cuts off about 9 months of permitting time. We get it done, and then we can go for an expansion permit in the future. So yes, we are playing the permitting game, but that's how they want to see it. So here's where we are today, 284 million shares outstanding. We're about 25 million market cap right now. You can see that big dip there. Yes, that was when we had to release the 50 million shares out of hostage of PwC that was held by Victoria Gold. That's been cleared, and the market's really liking seeing the shift for the company going up at a nice pace here. We brought in Larry Lepard as a big shareholder last round, which was fantastic, getting a lot more eyes on the story and a new newsletter writer, Don Durrett. But as you can see, we're still only trading for $14 an ounce in the ground, so lots of runway here. And you know, if you believe in the pure Lassonde curve, this is an ideal position to get into the stock. We're traded on the OTC and the TSXV and the Frankfurt, so I would encourage you to all become investors.
Okay, so presumably you're going to be doing some other level of technical study after you put out this PEA. What's the biggest sort of CapEx driver there, or sort of difference that you're going to see between the PEA and your next level of study, whether it's an FS or a PFS?
Yeah, so that's a good question. So we will be coming out with an additional PEA, not a PFS at this point, because first of all, we have 6 years of mine life. So when I'm thinking about who I want to work with to fund this project, what they want to see is currently in this document we have. But that being said, it's not really speaking to the numbers we have on the ground, meaning we're permitting being in production in 2027, and we're looking at 1950 pit shell, and I don't think that's really reasonable of what we have. So we've gone back through the studies. Respect and Kapuskassi did a great job, but they won't report what actually happened in mine life, meaning, for example, the 4 different pits are different deposits. In the Slab Calvada area, they were getting 62% recoveries, but they would only report 50 in this document, which frankly is upsetting. When we spend so much money on these studies, you're not really getting reality of it. So for us, we asked for an entire checklist from these guys. What do you guys need to see to get this to reality of what's been done in the past and the future of the project? We are working with 2 different groups that are working on methods to bring up the recoveries for transition and for sulfides. That I'm sure you guys know that the different companies that are doing that. So we've sent off rock to see how we can optimize that, because we have 2 million more ounces sitting there that could be processed if those procedures really work. So it could be a game changer for the company. So this drilling is focused in and around of, a PEA is your preliminary economic assessment for a reason. So we've got that checklist, and that's what we're going after right now.
So what is the budget for this year? How much is it going to cost for you to get to the updated PEA? And yeah, let's just leave it at that.
Yeah, so this round of drilling we will finish, and we'll be looking at raising money in the fall. And that will be another $3 to $4 million, and that will entail more studies, continuing our permitting, because you guys know if you take a break in permitting, that's not a good thing, and then on to more drilling in October. So really, when I look at Santa Fe on the permitting side alone and the drilling we need to identify different questions that need to be asked. If we just talk about the hard dollars, we need $5 million to the finish line in early 2027 for the ground, right? And I don't think that's a lot of money to be looking for between now and 2027. But that being said, with a lower share price, we're minimizing dilution in these different chunks by doing it strategically. So, we need $5 million total US to get that finish line. But again, we'll see where we are when we need to raise money and do it strategically upon dilution, et cetera.
Could you talk about the team a little bit? Why should we be giving them $5 million?
I forgot about my team. Yeah, so we just replaced the board. We've got a fantastic board. Josterfuss is here. I don't know if he's here right now, but he works at Verify. He's been with the company for a long time. We have Evan Pelletier, he's a mine builder. He's building 5 shafts right now. Shane Williams, who is the CEO of West Red Lake. I've known him for a very long time. He's brilliant. He knows all sides of the business, so it's fantastic to have him. And then Max, plus he used to work at Extract. I know him way back in Extract days. And Extract Capital is a big shareholder, so that's really good for the company. So very well-rounded from the capital markets side, raising funds. I used to work at Waterton and all kinds of different places, but we all know how to build the business together, so it's really well-balanced right now.
Okay, thank you, Kim. And next we have Murray Hill, Managing Director of Elevate Uranium.
Thanks, Elle. Let's step it up a notch. Let's get away from the boring gold. Everybody can do gold. Let's get on to something more exciting. The colour of my tie is the colour of what we're talking about, uranium. Everybody loves uranium. We all need it. And we are an ASX-listed uranium-focused company. Not interested in other commodity, just uranium. And what we've got is we've developed the upgrade process. It's a process that rejects 95% of the mass prior to leaching and hence lowers the capital cost and operating costs. We've now got a project to do it on. We've got the Copies project. It's 66 million pound and 78% of the Copies resource is in the indicated status. So that's the initiative for us to keep moving forward and taking our upgrade process to the next level. But we're not just about upgrade. We've got exploration happening. We made 4 discoveries in a 4-year period from 2019 to 23. We want to add to that. We want to add more pounds to our resource base. So that's what we're looking at. And a little bit on upgrade itself, because everybody wants to know about upgrade. It's a process that we developed in-house. What it does is it uses a conventional process, unit process you'll find in a gold base metal or mineral sands plant. And what we do is we concentrate the gangue mineral and throw it away. That's counterintuitive, it's innovative and hence patentable. So we've got 3 patents around the world on this process and that protects us from anybody else using it. But there's also a fair bit of know-how associated with it. So what we do is, because we pull a lot of the gangue out, some of the gangue minerals are calcite, which is an acid neutraliser. So when we finish our acid leach, we can actually throw the calcite back in and all of a sudden we've got an inert tailing. So environmentally, there's a huge number of benefits in what we do. So what we're looking at doing is we're looking at demonstrating our process through a pilot plant or a demonstration plant. To me, pilot and demonstration plants are interchangeable. We're building that in Perth at the moment in Western Australia. We're then going to move that, freight it to Namibia, and we're going to operate that towards the end of the year. That'll demonstrate and prove the process for us, and then we'll feed into a study. That study will confirm the cost. We've been talking about a cost reduction of capital of 50% and OPEX of 50% for a number of years. Now it's time to prove what we've been talking about. So that's what we're aiming to do. That's our focus for this year, is focusing on an upgrade process. So why Namibia? What a fantastic jurisdiction. If you've never been to Namibia, or if you don't know where it is, have a look on the map. It's in Southwest Africa. It was called Southwest Africa till it was 1990 when liberation occurred. So great holiday destination, but top 3 producer in the world for uranium. For 49 years, Rossing have been continuously operating, producing uranium. So there's 2+ generations of Namibians that aren't scared of uranium. They're not woke like they are in Australia and too scared to do anything about it. They're very familiar with it. They understand it. They've got a very established industry there. There's now 3 operating mines, uranium mines in Namibia, all producing and contributing to the wealth of that country and contributing to the growth for companies beyond, for like us, through exploration companies. They've set the path for us to follow. So we like it because it's got a deep water port, it's got an international airport nearby, it's easy access to town, a lot of salt roads around, easy driving on those, and it's, as I say, people are very familiar with it. What we do is it's ideally suited for upgrade for us because the ore is shallow, they're secondary uranium deposits, all within about 20 metres of surface, and it's inexpensive exploration. We're drilling $1,000 a hole. They're 28-metre deep holes. Sorry to use metric, but that's what I'm familiar with. And it's inexpensive exploration. So we continue to service the largest land package for nuclear fuels in the country, and we don't need anybody to help us out. We can do that ourselves, and we've had a lot of success at it. So what we really have is we've got 160 million pound of resources. 2/3 of those in the jurisdiction, Tier 1 uranium mining jurisdiction of Namibia, 1/3 of them in Australia, which is a Tier 1 mining jurisdiction. We've got our industry-leading process, upgrade process, which lowers the cost base, which we're going to prove this year. That's the aim of this year's efforts. And we're well funded. We've got $24 million in the bank, Australian dollars. The pilot plant test work, the construction, operation, and the subsequent studies costing us $8 million. We're still going to spend some money on exploration, but we've pulled back a little bit because we want to focus and get it right. We don't want to go back to the same pool or the same pond and ask for more money to what I was going to do before. So we are committed to getting this pilot plant operational and prove the process. And we've got a portfolio of growth. I mean, we have the largest land position for nuclear fuels in the country. We've got 4 discoveries in a 4-year period. 2 of those are now resources, and the other 2 we're working on resource development. So Once we've got copies up and running, we'll have others following it closely. And what a great time to be in uranium. The world talks about decarbonisation. Decarbonisation, yes, we need to produce energy that's carbon-free. We also want baseload energy. We don't want renewables that don't work. I was walking home last night and the sun wasn't shining because it was dark, although in Australia they think the sun shines 24 hours a day because we're going down that renewables path. But Trump talking about, 4 times your nuclear by 2050, you're currently the largest consumer of uranium in the world, and to go 4 times as much, you're going to be even bigger. So when you look at then electrification, that's more electricity coming out of the grid. So where's this all going to come from? It's going to come from somewhere, and it's going to come from uranium. So at the moment, there's not enough supply in the world to meet the current demand, and that's the current demand. And then you go and throw in data centres on top of that. You go in through electrification, decarbonisation, it's just going to get more and more. So you're seeing Google, Amazon, Meta, Microsoft all committing to nuclear off-grid, which means you can't have any of it. It's all going to them. And having done a data centre tour in Perth in Australia, it's amazing what they do and the growth they've got coming. So I'm excited about what's going to happen with uranium. With demand outweighing supply, the only way to incentivise supply is for the uranium price to go up. So we think the uranium price, or I think the uranium price is going to be beyond $150. Is that right? Beyond $150, Andrew. Thanks for that. Any more? 200 in the corner? Yeah. We're going to see a lot more uranium price come up. So thanks very much for listening, and I look forward to questions.
Can you tell me a little bit more about Upgrade? What's the timeline on getting more confidence with that technology? Who do you have partnerships with? And when do you expect that reduction in CapEx to really flow through?
So the timing is that the pilot plant is being built in Perth right now. We're expecting it to finish within the next month. We'll then freight it across to Namibia. It's about a 6-week exercise once it's on the ship. And then we'll set it up in the facility in Namibia, in Swakopmund, and then we'll begin the operation of it. So later on this year. From a partnering point of view, we're funding it ourselves. We raised money last year to do so, and we don't see any reason to involve anybody else. So we're looking by the end of the year, we've proved Upgrade, and then the study will overlap. So it'll commence before the end of the year.
Do you have any offtake contracts? Like, how does that work? Who have you signed up to buy your end product?
I was listening to Uranium Insider the other day, Justin Hugh, and he was talking to Ocean Wall about this very thing. And I also listened to Guy Keller from Tribeca, not Tribeca in New York, but Tribeca, the uranium fund in Australia and Hong Kong. And one of the key things they said is don't get too early down the path of offtake, because the uranium price we know is going to go north. We don't know what we're going to produce yet. We've got to do the pilot plant. We've got to do the study subsequent to that on different options as to how we process. Because when you reduce your mass to less than 5%, you can leach it on site or you can take it to a third party. So we've got a few options to look at in our study. Until we know that, it's not worth talking to off-takers. It's just too early, and you'd lock yourself into an agreement you don't want to be in.
The previous presenter mentioned the Lassonde curve, so I was just wondering, the current, management team, controlling shareholders, etc. Where do you see your exit point? Where do you want to take it? Are you operators? Are you developers? Are you explorers? Tell us a little bit about the kind of DNA of the company.
So in reality, and I'm a bit of a realist at times, what we see is that we'll prove Upgrade this year. We'll do a study on it and demonstrate the cost. We'll confirm the cost. We'll have added more pounds by then. The uranium price will be sitting at over $150 a pound, and we'll be primed for takeover. I don't think we'll ever get into production. I think someone else will, because the demand for uranium is going to be so strong. Where are they going to get it from? They'll be trying to shore up supply. US companies are going to be looking for uranium. The Chinese are already working very hard on that. They're a step ahead of the US. So the US need to step up to the plate and shore up supply. So there's going to be a huge demand for uranium, and I just think we'll be a prime target for takeover. We're being watched by 3 companies from 3 different countries at the moment. We know that. So one of them will take us. or someone we don't know about.
We will have peace in Ukraine, and then Rosatom can take you in Namibia. Rosatom in Namibia, they can maybe take you out if there's peace in the Ukraine.
Everybody loves Namibia and uranium, so there's plenty of buyers there. Thank you.
All right, so we can go from endless exploration to dangerous and controversial uranium to exciting cash flow, which is what I'm going to talk about here. This is probably the most important slide for my presentation. I founded this company in 2019, and after looking at 200 projects, my main criteria was, can it be permitted? Can it be in cash flow? I'm a business person. I'm not an engineer or a geologist, so my key was, can I get something into cash flow? We just became that in 2 months ago. We're now one of 9 companies in the last decade to have been permitted in British Columbia. So I'm very proud of that. That goes to the execution ability of our team. This is the site that you can see there up at the top right hand. You can see the portal, 1,000 meters of development already done. We are ready to go. People often say, so what do you need now? And what's near term mean? Another $40 million? No, we're fully cashed up. Our official opening is in 4 weeks from now. We're going to start in July 9th. You can see that. There's a very recent picture there. All of the development is done. We have a bunch of equipment sitting on site. We are ready to go. Team talked about earlier, my strength is to make sure that I have the right people around me to be able to execute. So the guy at the bottom right there, the second person there, Yanis Cedrus, just took a company from 200,000 to 2 million and sold it. That was in Guyana. The guy at the bottom right, Steve Cutler, currently one of the team who's doing Stillwater. Very, very experienced guys. Peter Bojos, you may know him, currently the chairman of Avino. Took me 2 years to convince him to come and help me out and work on this. He just finally came on board, has helped open over 20 mines. So the strategy here for me, they've already done it. They've been there. They've made the mistakes. Help me make sure that I don't make the same mistakes and get this thing into cash flow as quickly as possible. We did, to de-risk this project further, just a couple of years ago, I sent out 5,000 tons to the mill. We're toll milling this, so once again, de-risking it, no environmental concerns, let it be somebody else's headache. I'm not interested in that, right? So right at the beginning, not to miss this gold cycle, I want it to be in cash flow very, very quickly, so we sent out this 5,000 ton sample, and at the bottom you'll see there, they reconfirmed 9 grams a ton of gold at 95% recovery. So it was just absolutely stellar. And you can see here our trucking, the concentrate, 1 ton bags there of concentrate. They put it on the truck, and the next thing I know is that I got a wire. And this is what got me excited. Over 3.5 months, you can't quite see that there. That was $155,000. The next one was $420,000. The next one was just under $400,000. The last one was $754,000. That was when gold was $1,800 from only 5,000 tons. So that was proof of concept for us to make sure that my team got operational experience and for us to understand how this was going to work for us to be cash flowing. Very quickly, this is our current resource, 218,000 ounces. Nothing to get super excited about, but it excites me because it's a start. Most people forget it's been so long that many companies that have gone from exploration to development to production, people have forgotten that it takes 1 mine to get started. There was a little company in 1957 that started. You might have heard of it. It's called Alico. They started with 1 mine, and today they have 11. So that's our strategy. Get started with a basic starter mine at 218,000. That gives me 15-year mine life if I do nothing else to grow the resource at 9 grams a ton. Here's our current mine plan. That's 5 years. We have a 15-year mine plan already in place. Here's how we're going to mine it. And there you go. There's the cash flow, 55,000 tons. We start at 15,000 ounces next month. And it'll give me at the extreme right, if you see, at $2,600 gold, it'll give us almost 13 million cash flow. At today's prices, it'll give us almost 20 million. Next year, we'll go to 20,000 ounces. At 2,600 gold, you'll see it gives me almost 17 million in free cash flow. And at today's prices, almost $30 million. So the strategy is very simple. Get in cash flow, get moving, take what you can get in there, expand the resource very, very quickly, which I'll show you very quickly here. The darker area is the land package, 22,000 hectares. That's about 5 times the size of Manhattan. At the bottom left corner is where all the focus has been. You can't see that very clearly, but that little dot in the very center there, that's where the mine is. There's 50,000 meters of drilling that's already been done on this project, and that's given us enough confidence to know where our 1 million ounces is. To the right-hand side is the current resource of 218,000 ounces. On the left side is some of the drilling that we've done. You can see it's all mineralized. That's my low-hanging fruit. All I got to do is hire a crew, 7 days a week, infill, and that'll quickly get us to double and triple to the resource. Then we went 150 meters below the current resource, and you can see at the right here, over 3 meters of 18-gram gold. Multiple numbers, that's not the only one. There's multiple numbers that we have that have done that. And lastly here, you see there the dark gray is the current resource for 218, only 500 roughly meters to 200 meters. The white is the other drill holes. That's a clear path for us for 1 million plus ounces, plus the new discovery that we made here a couple of years ago that we have to follow up on. So lots of activity for us to take our free cash flow, and at the top there you see it looks like it could be a free a porphyry. And the very last thing is the land, the indigenous people. You can never grow a company in Canada or anywhere in British Columbia without the support of the indigenous people. We have an exceptional relationship. Because the first thing I asked them was, "What is it you want? What's important to you?" They said it's not the money. They had their philosophy is called Yinta. Yinta means be one with the land. So what did we do? How do I get that across to my staff, my people, to think about the land every day? I hired a local First Nations person, and I had her make giant murals of their culture, something that represents their culture. You see that there? We put that there at the mine site. Every single person who walks into that mine site, the first thing they see is that. Those chiefs there, they were in tears. They said, "We can't believe you thought of that." Then we put that on every single building. Every single building has a different image, reminding us of the Yinta. Every single day we have 2 meetings. Number 1, tailgate. Safety, 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 safety. Number 2, the Yinta. Take care of the land. That's it. 140 million shares out, almost nothing right now. And we believe we have a long ways to go. We're just getting started. The stock is already one of the best performing stocks of 2025. And we are just getting started. Cash flow.
Connecting the cash flow to the shareholders, is the plan to use the cash flow from the small production to do the drilling, the infill, to increase the resource? Or are you planning on sort of distributing dividends and kind of sharing the current the benefits of the current gold price with your shareholders, and then sort of fund the expansion and going beyond the 1 million ounces from alternative sources of funding?
Yeah, way too early to be thinking about dividends. Right now, we got to grow the company, right? I mean, we're trading at about a $70 million Canadian market cap. Way too early to think about. Yeah, we take the small production but large treasury, right? Because of the gold prices that we're going to get, and put that back into the ground to expand the resource. Because the low-hanging fruit is going from that 218 to 1 million. That's very easy. Just to infill, because we have over 50,000 meters of data to prove that what we need to do. So that's what we'll do first.
And there's no royalties sitting on it at the moment?
On the standard NSRs, but all the numbers I showed you is all net of that. Yeah.
Fun that you have cash flow. What's next? What are the timelines to expansion, your next resource update, all of that?
The next resource update will come later this year. I'm a bit cheap, so I didn't do it a few months ago because I knew the market wasn't going to care. Whether I moved it up another 200,000 ounces, the market wasn't going to care. They're going to care now because now we have their attention. We're gonna have cash flow, and now they're going to want to see the resource getting going. So you will see, in fact, the number is higher because the last drilling that we did is not included that. So you will see the resource numbers go up here later this year when we update the resource. What's next from here? Look, I'm a business person, so I never say no to anything. So we have conversations. We already have conversations going on with a couple of companies. Is it a merger? Do we acquire somebody? But here's what I know for sure. When there's cash in the company and it's coming in and we can prove that we're safely advancing and extracting this ore, the conversations are going to grow tremendously because nobody even knows us right now. That's why I'm here, to tell everybody about us. We're a very under-the-radar company. But once the cash starts coming in, it's going to be a game changer and people are going to want to have conversations with us.
That was incredibly fast, and I really I missed probably 70% of it.
Well, I had the timer going over here, and she's watching me like a hawk. So
yeah. So I guess I maybe missed. Are you?
You didn't miss cash flow.
Are you toll treating, or do you have your own mill?
We're toll milling it to start.
You're toll milling it
to start.
Okay. What's the capacity there?
It's a very unique mill. It's called Nicola Mining. It's a very unique mill where they're only milling right now for us and one other company, Talisker. which is a small amount. So we are their first priority because they invested $1 million. They like the project so much, they invested $1 million into us and now own 6% of the company. The president himself has done 3 financings, personally 6 figures himself. So I think I've got their attention pretty good. But once we start production, it is my plan to start the milling application process because we have such a great relationship with the First Nations and we have a great relationship with the government and we understand the process now. So we will start that right away.
Okay, thanks.
Our final presenter, we have Hugh, Agro, President Director of Revival Gold.
Thank you, everybody. Thanks one-to-one for hosting this. It's great to be part of this group. Some really nice companies here. I'll be quick. Revival Gold is a developer in the United States. We've got 2 gold projects, 6 million ounces of gold that we've developed up over the last 7 years in putting the company together. We're run by industry veterans and backed by the industry's best. Capital structure on this page, about 70 million US market cap. That translates into about $13 per ounce of gold in the ground, about 0.15 times NAV. So if you think about it, for every every 15 cents you invest in our company, you get $1 worth of value. That's another way of looking at it. Or in a price environment where gold is going up so dramatically, we offer 28 ounces of gold for every 1,000 shares of Revival Gold held. Importantly, we're 50% institutionally held by some of the best names I mentioned earlier, and 15% owned by management and board insiders. We are in the Western United States. Why? Because if you're going to invest in gold, you want to be investing in good geography where you don't have geopolitical risk. And I should note that this isn't just an overnight success. This team has been working away on these projects. We've made 2 of the biggest new discoveries in the United States in the last 15 years. Our Mercer project is on private ground. It's a historic mining area. It's really all in the name, Revival Gold, where we've revived assets and a team that's done it before. PEA highlights recently out would have this at about 100,000 ounces a year of production from a $210 million capex, delivering gold in just 2 years of permitting. Why? Because we're on private land in the Western United States. Land position at about 15,000 acres is significant. This is a Carlin-type deposit, which is really important to growth in the future. So as we go into production with that first phase of the operation, we'll continue to explore. And the exploration here is really exciting. Only 0.5% of the drilling to date has gone below 400 meters. And of course, these Carlin-type systems are the systems which underpin some of the biggest, most profitable gold mines in the world. The project site offers huge advantages with power, roads, office location, water, all in reach. And that makes for faster development, and importantly, no camp or requirement to fly workers in because we're about an hour from Salt Lake City. So quickly, the path forward for Revival Gold to get into production over the next 2.5 years, and then to continue to grow the business with our second project and third phases of development. We see potential from our 2 assets to go to over 250,000 ounces a year of production, all from the domestic United States, and with a team that's done it before. The combined underlying net asset value in our projects is $500 million. Remember, I said earlier, the market cap's $70 million. So lots of exposure, 100% gold. And just look at that upside. If you're a gold investor today, it's never been better. The gold developers are trading at exceptional value, and I would say that Revival Gold is one of the ones that should be in your portfolio for its exposure in the United States, 100% gold leverage, quick timelines to permitting development, backed by some of the industry's best, and led by people who've done it before. Thank you.
How much drilling are you doing this year in the next year at Mercer, and how much is that going to cost?
We'll drill about 30,000 feet at Mercer and another 10,000 feet at our Bear Track project. We'll probably spend about $10 or $15 million Canadian on our projects. That's typically our run rate to date.
I didn't hear, what's your reserve at the moment? Are we talking in ounces or resource?
6 million ounces of
6 million.
resource. The reserve is about 1 million ounces. Of course, we're moving the balance of that resource with 2.5 million of the 6 million ounces already in engineering studies, and we'll continue to progress that.
And the million is proven or probable?
Proven and probable, yes.
And what is the exit strategy?
The exit strategy is to deliver cash flow back to our investors. So if you look at our team, we're all people who've operated mines before, and that's our intention with this company. Thank you. Thanks, everyone.
Okay, thank you so much to our companies. I'd now like to ask our judges to convene for 1 or 2 minutes and decide our winner, and then Ellie can reveal our winner for us. Thank you so much. Okay, the results are in from our judges.
All right, well, thanks for entertaining our little break here to convene. So thank you everyone for presenting. Really wonderful presentations. Very clear ideas of what the next steps are and where investors can expect catalysts. Today we have chosen Blue Lagoon for the reasons that we feel the upside potential is clear. Next steps for drilling are understandable. Execution was strong on getting the small startup cash flow, and maybe some clearer next steps on what's in the future over the next 2 years. But we also like that there's good optionality on where you could be sending your ore beyond just your current toll milling position, and you're going to be marketing. So it seems like that's going to be a good, where you haven't been before. So it seems like a good next step for investors to expect lifting your stock price. Thank you.
Is that the $1 million in here? Is that?
No, maybe hold on to it for a while and it'll turn into that.
Careful, that bag is broken. You should hold it by.
Okay.
The $1 million are falling.
Oh, it's coming apart. Thank you very much. That was fun. Yeah. I'll tell you what. I'll use this bottle at the mine site on in 4 weeks to do the opening. How's that? And I'll think of all of you. Thank you very much.
We need our cut too.
Okay, and now we have the audience choice is in Revival Gold. Very well done. There you go.